Every single week that I'm pulling together the information to film these videos, I'm running into some really good information and some really bad information that is just like flat out lies. And I have to call it out every time that I see it, because I feel like some of this information can be very harmful to people that really don't know any better. And so as long as I continue to see misinformation, I'm going to call it out and I'm going to contradict it here in the videos to show everybody what's really going on. That way, next time you read a misleading story or a headline or see a video talking about how the housing market's recovering or whatever else they're saying, that you know that it is in fact false. So there's a guy named Jack McDowell who is a co-founder and chief investment officer at Palisades Group, and he's talking about how some markets are already recovering and that investing in real estate this year is still going to be a good play for investors. Now, I'm definitely not against investing in real estate, but I'm against people telling you things that are just not true. And basically what Jack is saying is that you got to look at what's happening big picture. You got to look at the demographic patterns of where people are moving to. You got to look at things like rental demand and inventory for the markets and different things like this that will determine where's a good investment opportunity. And while I agree with that statement, the thing that I don't agree with is talking about how, you know, some of the crazy markets that already have seen like a big downturn are starting to recover, because it's just not true, guys. And the couple of examples that they give in this story of markets that supposedly fit this criteria are Austin, Texas and Boise, Idaho. And I'm sure many people watching are very familiar with hearing about these cities by now, because they're some of the places where home prices went up the most during the whole pandemic. And now that things are starting to reverse, they're also starting to see some of the biggest losses. But people like Jack are saying that this is over, the losses are done, and that these markets are in recovery mode. And I have data right here in my hand from Redfin to completely contradict what they're saying, to prove that this is just not true, guys. And by the way, for anyone who wants to go look this up for yourself, you're more than welcome to. All this information is freely available on Redfin's website. So let's take a look at Austin, Texas. In the peak of the housing market back in May of 2022, median home values there were $670,000. That is a whopping figure for a place like Austin, where you go back to 2020 and home values were basically under 300K. So this place saw a massive uptick in home prices, right? But they've also been seeing home prices fall by a lot too. In fact, if you just fast forward to today, the median home price in Austin, Texas is now $527,000. But people like this are saying that the market there is starting to recover. Well, not so fast. Let's take a look at what the market in Austin is doing month over month. In fact, the market lost more value from December through January. So when you look at the month to month of a place like Austin, prices are still going down, guys. But you have people like this out there saying that it's recovering. It's not recovering. It's still falling. The proof is right here. In December 2022, home values in Austin were $532,000, and now they're down to $527,000. That's another $5,000 loss in just 1 month. So how can anybody look at this and say the market there is recovering? And take a look at this screenshot from the inventory over in Austin, Texas. The inventory there is literally above pre-pandemic levels, and this data comes from my buddy Nick over at Reventure Consulting. So you can clearly see here in this graph that inventory levels have come back to 2019 levels, guys. But people like Jack are saying that the market there is in recovery. How is that a recovery? When you have inventory at pre-pandemic levels and prices continuing to fall month over month for the last 8 months, what kind of recovery is that? Now, don't get me wrong, this is fantastic news for any would-be home buyers in Austin, Texas. The biggest hurdle you're facing right now are the high mortgage interest rates. But the overall market is definitely starting to turn in your favor. And the reason why these lies and these stories are so harmful to people is because if you listen to this and take it at face value and think that the market is recovering there, and you were to buy a home in Austin, let's say next month in March, and this trend continues forward, well, your house is just going to continue losing value throughout the year, and you could have got a better deal by just holding your horses a little bit longer and waiting for a better price, because as we can see, the prices are improving month over month. What about Boise? This is the other place from this story saying that the worst is over with, right? These guys have already seen, their crash, and it's all gonna be nothing but up from here, okay? In Boise, during the peak in May 2022, home prices were $585,000, okay? Fast forward to today, as of January 2023, now they're down to $477,000. And overall, the numbers in Boise are still going down month over month. And newsflash, guys, that's an 18.4% drop in home values in 8 months, okay? Tell me when the last time this happened. Oh wait, it never did. Not even during the 2008 housing market crash. But nobody wants to look at that. Everybody, like this guy Jack, is just saying that it's all in recovery mode and it's all going back up from here. Now I realize that these two markets are two really extreme examples of markets that just shot up like crazy and are also seeing a big downturn like crazy, and not all markets are going to be doing this. That's perfectly fair to say. But the problem with these stories is it confuses people. It makes you not know what to think. Even like when I'm doing the research, guys, like literally I saw this story, right? And I wanted to make it like the headline first story of this video. And then as I'm going through and I'm planning this video, this very first story that we just talked about is out of Business Insider. And then literally the next story I see from Business Insider says basically the opposite. This is their headline from this: housing crash. Prices will sink in these cities as supply tops demands. Like, you have one article saying that, the worst is over and everything's in recovery mode. And then you go to the next story from the same news outlet saying that, these cities are still going to be seeing a housing crash. Like, it makes no sense, guys. And so that's what I feel like I'm here for right now. I feel like I'm here to kind of sort out the madness for you and just give you a neutral, real picture of what's really going on out there. Because to me, this second story is more in line with reality, even though it does have some misinformation in it as well. But let's take a look at what they said. Now, they're using data from Goldman Sachs in this one on what their housing market predictions are, and they're directly contradicting what they just said in the last story. Now look at this. By late 2024, home prices in Austin, Texas will decline by 19%. Well, they've already declined by almost 18%. So this is already kind of fake information if you think about it, because, at this rate, it will have already have fallen by 19% before the summer comes. And who knows where it's going to be by late 2024. I mean, that's kind of too far away to predict or imagine. But, the way things are going right now, it's not looking too good. They're saying Seattle will go down by 12%. 16% in Phoenix, 15% in San Francisco. I believe all of these figures are just already wrong, because when you look at how much it's already dropped from the peak until now in these places, it's already by this much percentages, if not more. And of course, they're saying that these markets are seeing big upticks in inventory and lower amounts of closed sales. But you're gonna start seeing that trend in a lot of different places, except for maybe the most affordable housing markets across the US, where prices are still affordable relative to what people are earning, even with these higher interest rates. Now let's switch gears for a minute and talk about some of the struggles and challenges that home buyers and home sellers, frankly, are facing right now in this new market. And the reason I want to bring this up is because I have a specific story here to share with you guys that I think a lot of people can relate to right now, which ultimately I want to try to offer a little bit of advice on as well. So let's look at this. There's this couple in Savannah, Georgia, and they've been trying to buy a home since 2020. Now, I know that sounds absurd, but these guys have just been lucking out left and right. They've looked at about 50 houses in this time frame, and they've made several offers, and every single time they've made an offer, they've gotten beat out by a cash buyer. Now, that story is obviously pretty relatable over the past couple years, and you know, this is happening to a lot of people. And this is what the couple is saying. They're saying, when we see new listings, we don't get excited anymore, okay? We feel burned out. Sometimes we feel numb to the whole process because it's been so repetitive, and it just feels like the listings are stagnant and there's no light at the end of the tunnel. So that's a pretty hopeless feeling when you're talking about looking for a house right now. So obviously, this is not where you want to be if you're a buyer, and feeling like this can make you just give up hope. And honestly, guys, right now, giving up hope is not such a bad thing in terms of, you know, just holding your horses a little bit. Right now, just waiting 6 to 12 months, I think could save a lot of people a lot of money, especially if you live in one of these declining markets. And that's why I'm always telling everybody to pay attention to what's happening in your market, because there's a good chance your market's seeing month-to-month declines right now. And if that's happening where you live, that's almost a guarantee that you're going to be able to save some money if you just wait a little bit longer, because interest rates are going to remain high indefinitely. Okay, we just hit, you know, a little over 6.5% last week, and it's getting close back to that 7% range. And I believe you're going to see interest rates hover around this much, if not even break over 7%, as the Fed continues their rate hikes this year. So anybody who's hoping for interest rates to come back down, which is one of the other lies that they've been telling, that, you know, by the end of the year it's going to be like 5% again, or 4.5% or whatever, keep dreaming, guys. It's not going to happen. But people like this are starting to lose hope that they're not going to be able to achieve the American dream of home ownership, that buying a house just might remain out of reach forever. And I think part of the reason people feel like this is because, you know, just looking to buy in this insane time that we just went through is basically unprecedented. It's not something that any other generation in the past has ever had to deal with. So first of all, the circumstances are skewed, right? But beyond that, we have this instant gratification culture today where everything has to be right now. And this is completely reflected in the housing market, I believe, with people's mentality. Now, granted, this couple has been trying to get a home since 2020. Now, that is a long time, and it's very unusual for home buyers not to be able to secure a home, you know, in a matter of 2.5 years like that. But I would say their circumstances are not the norm, and people just need to learn how to be patient again. Because if you care about getting a good deal on the property, then patience is going to serve you well right now. But you know, they relate this to being rejected for a date. You know, every time we try to make an offer, we get rejected, and it's just like dating, where you're constantly asking somebody out and you're always being told no, you know. And I think you have the rejection side of it. People can't handle the rejection these days. And then you have the impatient part of it, where I just got to get the house now. But I want to inject a little bit of advice in here for people who are in this situation that might give you a little bit of an advantage in this housing market. So if you are out there looking to buy right now, this is what I suggest. First of all, start looking at only houses that have been sitting on the market for 60 days or longer, okay? So places like that are probably either overpriced, maybe they're not in the most desirable locations, or maybe they just need a lot of work, something like that. But the point is, these properties have been sitting for a long time. And with properties like this, you're probably not going to have to worry about being outbid by a cash investor, because if someone like that were interested in buying it, they probably already would have. So let's use Austin, Texas as an example, since we already have the figures on this from earlier in the video. So say you're a home buyer right now in Austin. Here's a great way that you might be able to score a good deal right now. So you see the peak prices were $670K, and now it's $527K. So prices have already fallen almost 18%, okay? They're down 17.6%. And then what I would do is you look at these properties that are 60 days on the market or older, and then you make an offer of 10, 15% below what they're asking, okay? And say you get an offer accepted, they accept your 10% under asking price offer, okay? Well, now you've just secured yourself a deal that is literally 27% lower than peak home prices. So that's not a bad deal in today's market. And what that does is it insulates you a little bit more from home prices coming down even further, which is likely to still happen, but at least you already have some of that home price decline built into your purchase price, okay? If you can't wait, that is. So if you're a home buyer right now, this is the strategy I'd be looking at, guys. Look at homes that have been sitting on the market for a while. Look how much your housing market has been declining, and make offers that are 10 to 15% less than what they're asking for. And you know, look at the comps. Look at what things are selling for in the area. If you see a house that's sold down the street for $450K and this guy wants $520, forget about offering 10% less. You need to offer at or below what the other house sold for, because the market's on its way down, not up, if that makes sense. And here's the other interesting twist to this story is a lot of people think, especially home buyers, that home sellers have it made right now, and these guys still just have everything in their favor, but not quite, because when you look at what's happening, there's a lot of sellers out there that want to sell but are afraid because interest rates are high. They're afraid they might not be able to get into a comparable home that they can afford. All right, so it's preventing some people from listing that otherwise would list. And another big concern that home sellers are facing right now is a lot of them are starting to realize that they missed the peak of the market, okay? They're probably starting to watch some of these videos and realizing that they missed the boat, okay? If you really wanted to take advantage of this housing market, you should have sold last summer. That's the reality. And anybody who's looking at doing it now, moving into the spring selling season, is not going to be getting the type of dough that their neighbor did 8 months ago. So that's like a seller's remorse type of story, right? Instead of the buyer's remorse. I wish I would have sold earlier type of thing. And the other problem is you have a lot of people who bought homes over the past couple years, and now they're looking at maybe needing to sell because they thought they were going to be able to work remotely indefinitely, and that's turning out to be not the case, as a lot of people are getting called back to the office, and now they're faced with this decision: do I sell this house and get rid of this fantastic interest rate, or do I want to take on the headache of becoming a landlord right now? So some of those options are not really appealing to people, and you know, put yourself in someone's position like that. If you sell, you're going to make money off the sale, most likely, but at the same time, you're giving up that fantastic interest rate. And not everybody wants to be a landlord, because, you know, if you're moving back to another city, say you moved to Texas from New York or California or whatever, and now it's time to go back to the office, not many people want to manage a rental from 2,000 miles away, you know? Now, when or if they ever sell this house, the owner's going to make an absolute killing, because he bought it back in 2000 for $236,000. They tried listing it for $1,699,000. They've lowered the price. Oh, I'm sorry, they improved the price several times now, down to $1,495,000, and it's been about 4 months. So let's see what happens with this one. Now, for everybody who's always asking for good news instead of all the bad news that we talk about, how about this story for you? There was a bunch of economists surveyed recently asking about the recession and what they think is going on, and half of them don't even think there's going to be a recession, right? But the other half of them that do think there's going to be a recession are saying that the recession's probably going to come later than expected, because previously economists were expecting the recession to start in the first quarter of 2023, and now a bunch of them are rethinking that and saying that it's probably not going to happen until the second quarter, maybe April through June, and 1/5 of the respondents for this survey think that it might not come until July or September. And the reason for their change in sentiment is because the job market is still strong. This is the typical things that we've always heard, right? Inflation's going down, or at least it was, and the unemployment levels are at the lowest amount since 1969. Retail sales and restaurant sales have jumped 3% in January, and this suggests to many economists that the overall economy is still very healthy and people still have money to spend. Okay, great. So why is this good news? Why am I bringing this up? Well, first of all, let me just acknowledge once again that I think the recession had already began last year. But that's my opinion of where I believe things are at right now. But the reason why this is good news for you, especially if you don't think that we're in a recession yet, is because it gives you time to still prepare. If you don't think that we are in a recession now, well, a lot of economists think that it's coming still at some point later this year. And to me, the reason why this is good news is because it still gives you time to buy things like gold and silver, okay? It still gives you time to save more money. It still gives you time to pay off that debt that you're still owing a balance on. It still gives you time to look for a better paying job now that unemployment numbers are still at record lows, right? There's time to prep for this still and not get left behind when things take a real turn for the worse. And that's what I'd be looking at doing right now. And that's what I have been doing. But like I said, if you don't think that we're in a recession yet, then this is a great time to start preparing for one, because the worst thing that can happen, guys, is that we get into this recession and you're not ready. You don't have gold and silver. You don't have any money saved. You're still paying the highest credit card interest rate ever. Things like that is terrible for you right now. And versus if you are ready and you have all these things and you're prepared for it, and then what's the worst that can happen? Oh, you're making more money now. You have money saved in the bank. You have some physical hard assets that retain its value. I mean, seriously, what's the worst that can happen by getting ready for it? Nothing, if you ask me. It seems like only good things can come from that. So you want your daily dose of good news? Here it is. There's still time to get ready for this. So if you enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video. And if you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.